In this video I'm going to do a comparison against two of the UK's largest FTSE 100 companies that are in the energy section. Anybody guess who they are? BP and Shell. I'll have a look at a number of different elements. We'll have a quick look at their company background, where they operate, and then jump into a bit of a financial analysis of the two companies and pit them against each other. And we'll be looking at things like the normal metrics that I look at: their market cap, their dividend yields, are they undervalued, debt to equity, and a few others. And then I'll suggest what I do with these two companies. Welcome back to the channel, and if you're new here, hi, I'm Mark of Desperately Seeking Fi. Let's do a quick bit on history. Shell, slightly older by a year or two, founded in 1907 and was known as Royal Dutch Shell Company. It's grown to become one of the largest oil and gas companies in the world, and it operates in over 70 countries across the world. Involved in a wide range of energy related activities, be that exploration, production and refining to marketing. BP, founded in 1909 and originally was known as the Anglo-Persian Oil Company. It's also grown to be a major energy player, and it operates in countries all over the world and is involved in basically the same kind of activities as Shell. Not very much different that way. Let's have a quick look at some of the financials for these companies. I'm going to start off with some of those big ones. What are their market capitalizations? BP's market cap is 103 billion, whereas you have Shell coming in at 201 billion. So it's slightly larger. And the revenues, looking at just March past, 245 billion for BP, and Shell coming in at 384 billion. So once again, larger market cap for Shell and larger revenue. And it also comes in with a slightly larger profit margin, coming in at 11.4 compared to BP being at 10.6. They are very cyclical in their nature. If you have a look at this chart, you will see when we hit COVID, the share price drops down massively, and if you'd bought in at that stage, you'd be 70-80% up as of today. But it's all about when do we buy in and when do we see that there is value, and we'll cover a few more of those things as we go through this video. One of the things that I'm really interested in is the dividends, and these are two reasonably good paying dividend companies, with BP coming in at a forward dividend yield of 4.49% and Shell being estimated at 4.41. Their payouts really good, really below that benchmark that I look at, with BP at 18 and 19% for Shell. So that's really good. It shows that they are cycling some of their money back in, and they are, because they're looking at sustainability in the longer run and looking to move towards net zero by 2050. But also, if you think about it, they lost a lot of money when we went into lockdown, so it's potential that they are recouping some of that as well as investing into the future. What I do quite like about these companies is they are both quarterly dividend payers, and they pay in those normal end of quarter month of March, June, September and December, and they both go ex-dividend on the 10th of August. If we have a look at these charts, their dividend histories are not particularly great. I think we can say that they are on a 2 or 3 year streak. They were doing really well up until we sort of hit that COVID period, and then they have to slash their dividends. And this is what we always say about dividends are not always guaranteed. You may find that companies actually cut their dividend so that they can continue with operations and don't give that benefit back to the stakeholder. If we think of dividend growth rate, and that 5-year dividend growth rate is something that I like to look at, if we think back to those dividend history charts, it's not going to be a surprise, but it isn't a particularly rosy picture for either of the two companies. BP comes in at minus 8.8% 5-year dividend growth rate, whereas you have Shell coming in at 10.58%. If we then jump on and look at that 1 year and that 5-year price history, we're looking at BP has fared much better in this 1 year period, whereas you have Shell being on top over that 5-year period. The 5-year compound annual growth rate, so the 5-year CAGR for the two companies, coming in at a minus 2.1 for Shell, and BP almost twice that at minus 4.1. And I suppose that isn't to really be unexpected when we think of it. We had COVID in the middle, and then we've had the run up over the last few years, and then we have the blip of the Ukraine war kicking in as well. Final couple of financial metrics that I also like to look at are obviously that debt to equity. Are the stocks undervalued, and what are their forecast growth earnings looking like? Shell wins with the lower debt to equity coming in at about 29.3%, and BP coming in at 55.7%. Both of those are still okay. If I was looking that score, still reasonably happy on that. And then we look at whether the stocks are undervalued or overvalued, and we have one coming in at being overvalued and one coming in at undervalued. If we take the Simply Wall Street figures, and I've got a link down below if you want to go and have a look at that and have a couple of week trial, see what you think of Simply Wall Street. They are predicting, and Shell showing a little bit better value, with it being undervalued by 7.9%. Both companies are forecast to reduce their earnings growth over the next number of years, and you have BP being below that industry estimate for the energy industry, which is looking at the industry being down about 19.5%, whereas you've got BP forecast to reduce by about 23.5% over the next number of years. Shell being predicted to only be down minus 19.1, slightly better than the energy industry average. ESG also plays a huge part in both of these companies. They have done an awful lot to try and progress their credentials, reducing their carbon footprints, but they've taken a very different approach to how they are looking at this. BP is targeting very much that renewable energy sources, looking at wind and solar power, and the company has really set itself some ambitious targets to become carbon neutral by 2050, and it's pledged to reduce its oil and gas production by somewhere in the region of 40% over the next decade. Shell, they've been focusing their efforts very much on the how can they go for cleaner fossil fuels and carbon capture technologies. And they once again are looking at trying to go net zero by 2050. And they're trying to do this by basically going for cleaner alternatives to that dirty type of oil that they have. On the risk side of things, what are the risks for an energy company, an oil company like the pair of these? They have several, and I'm just going to pull out a couple of the key ones that I think they have. One is going to be a decline in oil price, and that's probably the major one. And if we have a quick look at this chart, we can see going from that high of nearly $120 per barrel down to, we've actually bounced off a low of about $62 per barrel for crude oil. That's a major issue, and OPEC can manage to do a bit of playing around and manipulating price, and we've seen that recently. And what happens if that price comes down? You then end up with the price of potentially BP and Shell dropping as well, and less money coming back to the investor. And what happens if that goes on? You might find that dividends then get reduced. There is obviously the possibility of having some form of environmental disaster. So we think back, I think the one that sticks most in my mind, and actually it was BP, was Deepwater Horizon in the Gulf of Mexico back in 2010. Major oil spillage, and what does that then result in? You have billions of pounds worth of fines. They have to tidy up the mess that they've created, and it really did dent BP's company reputation. And then another issue that we might have is, obviously, you have the price of oil in dollars, so you have cable US versus Great British pounds. If there are major fluctuations in the exchange rates, you could end up having a negative effect on the price of these two companies. That's just a quick whistle-stop tour through those. Do I hold any of these at the moment? No, I don't actually hold either of these companies per se as individual stocks. What I do is I wrap them up in a number of different ETFs that I actually hold. So I hold them within my IUKD holdings, so the iShares UK dividends, and also through the Vanguard UK ETF funds. I've done videos on both of those. I'll drop those down below. Hopefully you find that of some use. As I always say, go and do your own due diligence, figure out if this is something that you want to invest into. But thank you very much for watching, and I'll see you in the next one. Bye.